Okay, so have you ever heard of Larry Fink?
Yeah, I have
I
actually.
mean, he's not exactly a household name like, maybe Bezos or Musk,
Right.
but in the world of finance,
Hmm.
he's been called the most powerful man.
Wow.
Yeah.
The most powerful.
So in this deep dive, we're going to go beyond just like his current influence, though, and really like trace his path to power.
Okay.
And we're going to look at like how his decisions, kind of shaped the financial world that we live in today.
Interesting. Well, I know he heads BlackRock, right?
Yeah.
And that's like, what, trillions of dollars under management?
Yeah, it's massive.
It's mind-boggling. So where do we even begin with a story like that?
Well, I think we got to start back in the beginning, like
Yeah.
Fink's early days, the origin
Right
story.
back to the roots. I like it.
Yeah. So he starts his career in the 1970s as a bond trader at First Boston.
First Boston, huh?
Yeah, and this was right when mortgage-backed securities were emerging.
Oh, wow. So he was there at the ground floor of like a major shift in finance.
Exactly. And get this, reports say he was one of the first traders to have a computer on his desk.
Oh, really? In the 70s? That's pretty cutting edge.
Yeah.
So, I mean, was that just like a cool tech gadget, or did that actually give him a strategic edge?
It was a game changer, really, because, back then, these early mortgage-backed securities,
Right.
they were incredibly complex.
Oh.
And by harnessing the power of computing, Fink could analyze these securities way faster and more thoroughly than, like, anyone else.
Ah, so he could spot opportunities and like assess risks in ways that other traders just couldn't.
Exactly. And it kind of foreshadowed his success, later in using data and analytics to drive BlackRock's investment strategies.
Fascinating. So it sounds like he was a real innovator from the start.
Oh, yeah, definitely a sharp trader. But, his career wasn't, like, without its bumps in the road.
Oh,
Yeah.
right. What?
In 1986, he experienced a significant trading loss, reportedly around $100 million.
Oof, $100 million. That's a tough blow.
Yeah. So how do you think that kind of setback shaped his approach to risk management, going forward?
Well, I mean, a loss like that,
Yeah.
it has to make you rethink everything.
Right.
It probably instilled in him a pretty deep aversion to, unchecked risk. I bet he was still ambitious and driven, but more cautious after that experience.
Yeah.
Probably much more aware of the need for like robust risk management systems and a more cautious approach, especially to certain investments.
Yeah. And that became a core principle at BlackRock later on.
Interesting. It's like that failure, that loss kind of set the foundation for their future success.
In a way, yeah. So after leaving First Boston, Fink was determined to start his own firm.
Okay.
But, that couldn't have been easy, especially with, like, a recent very public loss on his record.
Yeah. Who's going to trust the guy who lost $100 million?
Right. So how did he manage to get BlackRock off the ground?
Well, that's where Steve Schwartzman enters the picture.
Yeah,
Right?
Evander Blackstone.
Yeah. A legend in finance, known for his shrewd investments and like his ability to spot potential, right?
Exactly. And despite Fink's recent setback, Schwartzman saw something in him.
Okay. So what was it about Fink that convinced him to take a chance?
Well, he saw Fink's talent, of course, but, like, crucially, his vision for the future of asset management.
I see. So more than just picking someone who could make a quick buck.
Right. He saw Fink's potential to build something really big.
That's pretty impressive.
Yeah. But their partnership, that wasn't built to last.
Oh, what happened?
Well, there were reports of clashes, between their personalities and visions for the future of the firm.
Ah, the classic clash of titans.
Yeah, exactly. So the tension stemmed from their differing views on ownership and control.
Ownership and control. Always a tricky issue.
Yeah. So Fink recognized the potential of their asset management business and proposed changes to the ownership structure.
Okay. Such as?
Well, he wanted to offer more stock options to, like, attract top talent.
Okay. Makes sense.
He saw it as essential for growth, getting the best minds in the industry.
I mean, that seems pretty reasonable, especially for a company that's, focused on financial performance.
Right. But this caused a rift with Schwartzman.
Why? I don't get it.
Well, Schwartzman, even though he was a successful investor and, often embraced calculated risks, he was resistant to giving up control.
Ah. So even the most seasoned investors can sometimes, let personal feelings get in the way of a good business decision.
Exactly. And in this case, it led to a split that would reshape the entire financial landscape.
Wow. Okay, so what did Fink do?
Well, unwilling to compromise, he sought out a buyer for Blackstone's stake in his asset management business.
Oh, and did he find one?
Yeah, he found one in PNC.
PNC.
Yeah, a large financial institution based in Pittsburgh.
Okay, so Schwartzman sold his stake.
Yeah, and unknowingly, he gave up what would become a financial giant.
Talk about a missed opportunity.
I know, right?
Ugh.
And with that separation, BlackRock was officially born in 1994.
1994. The rest, as they say, is history. But I'm really curious to hear what happened next.
Yeah, we'll get to that in part 2 of our deep dive.
Can't wait.
So last we left off, Larry Fink, he just secured independence for BlackRock.
Right.
It was the mid-90s, and the financial world was like on the verge of some major transformations.
Oh, yeah. Definitely a time of big change.
So how did Fink, capitalize on these shifts to propel BlackRock to like its current position?
Well, you got to remember the 1990s, it was like this time of rapid innovation and growth.
Right.
Especially in tech, right?
Dot-com boom, yeah.
But it wasn't just tech. I mean, alongside that boom, there was like this growing appetite for increasingly complex financial instruments.
Oh, yeah, I remember hearing about that.
It was like the era of financial engineering.
Okay. And I mean, I guess that makes sense. More complex markets need more complex tools, right?
Yeah, but the thing is, not everyone really understood the risks involved.
Right. Those derivatives, Fink helped develop back at First Boston. They were becoming even more intricate.
Yeah, they were getting pretty wild. So were there any like early warning signs that this complexity was creating instability?
Well, some economists and analysts, they were definitely raising concerns
Oh, bow.
about the opacity of these complex instruments, the difficulty of assessing their true value.
Oh, I see. Hard to tell what they were actually worth.
Exactly.
Mm.
And like the potential for systemic risk if things went sour.
Right. If one part of the system failed, it could bring the whole thing down.
Yeah. But the allure of high returns and, this belief that these instruments could like effectively manage risk,
It was a powerful combination.
it overshadowed the concerns for a lot of people.
So while all this is going on, BlackRock, they're building their reputation.
Right. They actually stepped in to help General Electric, GE.
GE.
Yeah, they were dealing with a portfolio of what were called toxic assets.
Okay, toxic assets. What made them so toxic?
Well, GE, under Jack Welch,
Welch.
they invested heavily in these complex mortgage-backed securities and other derivatives.
Okay, so they were basically bundles of loans.
Right. But a lot of them were subprime and, increasingly likely to default.
Ah, so as the housing market started to weaken, the value of these assets just plummeted.
Exactly. And GE was left with this like massive problem.
Okay, so that's where BlackRock comes in, like the financial cleanup crew.
Yeah, basically.
So what was their approach to like untangling these toxic assets?
Well, BlackRock's strength, it was in their analytical capabilities
Okay.
and their understanding of risk.
Right. They had been focused on that from the start.
They built sophisticated models, employed all these like mathematicians and financial engineers.
So they could really dissect those assets, figure out what they were actually worth.
Exactly. And develop strategies to mitigate the losses.
Smart. So it wasn't just about having smart people. It was about using data to make sense of the chaos.
Exactly. And their data-driven approach, it really set them apart.
They could see the risks and opportunities that others missed.
Right. And that allowed them to not only help GE, but also position themselves as the go-to firm for these complex financial situations.
It's almost like they were anticipating the problems that led to the 2008 financial crisis.
In a way, yeah. Their expertise in risk management and their understanding of those instruments
Right.
gave them this unique perspective on the vulnerabilities in the system.
Okay, so let's talk about that crisis. The housing bubble burst, and it triggered this chain reaction.
Yeah, panic, collapsing institutions, government bailouts.
Where was BlackRock during all of this?
They were right in the thick of it.
Really?
Governments and financial institutions were calling on them.
For what?
They wanted advice, analysis, solutions.
Oh, wow. So they were tasked with valuing those toxic assets.
Yeah, held by institutions like Bear Stearns and AIG.
So they played a key role in stabilizing the system.
They did. But of course, it wasn't without controversy.
Right. There were a lot of criticisms about the bailouts and BlackRock's role in all of it.
Yeah. Some people argued they benefited from the crisis, that their ties to the government gave them an unfair advantage,
Yeah, I can see how that would be a concern.
and that their involvement in the bailouts created conflicts of interest.
Others defended them, though, right?
Yeah. They said BlackRock's expertise was crucial to like prevent a complete meltdown.
It's a complex situation for sure.
It is. But one thing's clear. The crisis cemented BlackRock's position. They were a major force in the financial world.
And it set the stage for their next big move, ETFs.
Exchange-traded funds, they're everywhere now.
Right. So just as a reminder, what are they and how are they different from like traditional mutual funds?
Well, at their core, ETFs are like baskets of stocks or bonds
Okay.
that trade on an exchange, just like individual stocks.
Gotcha.
They're designed to track like a specific index.
Like the S&P 500.
Yeah, exactly. Or like a particular sector, like tech or healthcare. And unlike mutual funds, which are usually actively managed, ETFs tend to be passively managed.
Meaning they just try to mirror the performance of whatever they're tracking.
Right. So instead of trying to, beat the market.
You're just riding the wave.
Exactly.
Yeah.
So what made them so appealing to investors, especially like after the 2008 crisis?
Well, for one thing, they're generally cheaper than mutual funds.
Lower fees.
Yep. And after the crisis, people were looking for more cost-effective ways to invest.
Makes sense.
Also, they tend to be more transparent.
You can see what's in them. Right.
Exactly. No surprises. And then there's the rise of the internet, online brokerage platforms.
Made it easier for people to buy and sell them.
It was like the perfect storm. Demand for low-cost, transparent investments and easy access through online platforms.
So how did BlackRock capitalize on this?
Well, they saw the potential of ETFs early on, and they made some strategic acquisitions.
Like?
The biggest one, iShares, from Barclays Global Investors.
Oh, wow. iShares. Yeah, I know them.
That move, it basically put them at the forefront of the ETF market.
It was a bold move acquiring such a big player.
It was. But BlackRock, they recognized that ETFs were becoming increasingly popular.
Yeah.
And iShares, they were a leading provider, strong brand, global reach.
By acquiring iShares, they not only gained like significant market share, but also all that expertise and infrastructure.
They were ready to dominate the ETF market.
Okay, so we've traced Larry Fink's journey, right?
Right, yeah.
From bond trader to the head of BlackRock.
It's an incredible story.
It is a company that's now like synonymous with ETFs, right?
Absolutely.
And they've amassed like trillions of dollars in assets.
Trillions.
It's kind of mind-boggling. But this, this sheer size brings up some pretty big questions
Right.
about their influence,
Right.
and like what it means for the future of finance.
Yeah, it's a level of influence that's hard to even like wrap your head around.
It really is.
They're the largest shareholder in pretty much every major public company.
I mean, it's billions of dollars invested in companies like Lockheed Martin,
Oh, yeah.
Northrop Grumman.
And countless others.
Yeah. And it's not just like the volume, right?
No.
It's the potential power they have to shape like corporate behavior.
Right, exactly.
So if BlackRock decides to divest from a particular industry,
Yeah.
or they push for, some specific environmental or social policies, it's not just a financial decision.
No.
It sends like a signal.
That can ripple through the entire market.
Yeah. So how did they go from managing risk and maximizing returns to this position where they can like potentially steer corporate actions?
Well, for a long time, BlackRock was known for their passive investing approach.
Right.
They tracked the market, aiming to mirror performance rather than trying to, beat it.
That's where the ETFs come in.
Exactly.
Yeah.
But in recent years, there's been a noticeable shift,
Oh, yeah.
particularly with Larry Fink becoming more vocal about stakeholder capitalism.
Oh, yeah. I've heard him talk about that.
It's this idea that companies should have a social purpose.
Right. Focus on sustainability.
Yeah.
Engage in ethical practices.
Exactly. It's a far cry from that, like, traditional Wall Street image.
Yeah, the whole maximizing profits at any cost thing.
Right. And he's even said, like, to prosper over time, every company must not only deliver financial performance, but also show how it makes a positive contribution to society.
Wow. That's a pretty powerful statement coming from, the CEO of the world's largest asset manager.
It is. It's a signal that BlackRock's influence goes way beyond, like, just making money.
They're using their position to drive change.
Yeah.
It's almost like a new era of activism.
Right.
But not from, like grassroots organizations or social movements. It's coming from the top down.
Wielded by a financial giant.
It's fascinating.
Yeah.
But it also raises some, like, serious questions.
Absolutely.
Like, is it right for an asset manager, even one as big as BlackRock,
Yeah.
to have this much sway?
It's a tough question.
It is. What happens when the lines get blurred between, generating returns and advocating for social or political change?
Where does fiduciary responsibility end?
Yeah. And like influencing broader societal values begin.
These are important questions.
They are. And this deep dive has, given us a lot to think about, from Fink's, early days as a bond trader to the growth of BlackRock, the explosion of ETFs. We've seen how, financial innovation and ambition can, like, completely reshape entire industries.
And we're left with this reality: the decisions made in BlackRock's boardrooms,
Yeah.
informed by all their data and analytical power.
They have ripple effects that go way beyond Wall Street.
They impact the companies we invest in, the products we buy, even the future of like global capitalism itself.
So as we wrap up, we leave you with this. What role do you think BlackRock should play in shaping the future?
It's a question worth pondering.
Is their influence a force for good, pushing companies towards sustainability and responsibility?
Or is it too much power concentrated in one place?
Yeah, that's something to think about.
It's a complex issue. No easy answers.
But by understanding BlackRock's journey and the evolution of the financial industry and the complexities of their position, we can engage in these crucial conversations in a more informed way.
Keep learning, keep questioning, and as always, thanks for joining us on The Deep Dive.